Okay, let's unpack this. Today, we're diving into something really fascinating from the pharmaceutical world. This is actually a two-part analysis of Torrent Pharma's recent acquisition. In this discussion, we will take a deep dive into how the acquisition is strategically designed to strengthen Torrent's market position within the Indian pharmaceutical landscape. For you, our listener, the goal is simple. We're going to distill the most important nuggets of insight from our detailed analysis, give you a clear understanding quickly, without, getting bogged down in jargon. We're on a structured journey through these details, piece by piece. So let's jump right in. Our analysis shows the first major driver behind this deal is, it's all about enhancing market leadership and scale. Torrent's core objective with acquiring JB Pharma seems clearly to achieve greater presence, greater leadership in India. We're talking about some pretty compelling numbers here. Based on our analysis, Torrent's market share in the Indian pharmaceutical market, the IPM, is projected to jump by 120 basis points. That's 1.2 percentage points, bringing them up to a solid 4.6%. Now, while 1.2% might sound small on paper, in a market as vast and, frankly, fragmented as India, it's actually huge. It's enough to propel Torrent to become the fifth largest pharma company in the country. That's a significant leap, 2 notches up.
Right, a jump of 2 notches. And the immediate implication of that enhanced market share is clear, but let's maybe dive into the longer-term impact a bit. This isn't just about a bigger slice of the pie. It's fundamentally about shifting the power dynamic. In India's often fragmented pharma landscape, like you said, even a 1.2% market share jump can suddenly mean commanding better terms from suppliers for raw materials. It can mean more leverage with distributors, maybe even improved relationships with pharmacies.
Better terms across the board.
Exactly. All of this can lead to, tangible cost efficiencies for Torrent. It directly impacts their bottom line in ways smaller players can only really dream of. And our analysis certainly reinforces Torrent's strategic focus on the robust, growing Indian domestic market. We see a slight increase, based on the analysis, in Torrent's share of India business within its overall revenues. It rises by about 50 basis points to approximately 57%.
Okay.
This domestic focus is crucial because, the Indian market offers far more stable and predictable revenue streams.
Right.
And that's a significant advantage compared to the often volatile, sometimes unpredictable international markets.
That's a great point about stability. Predictability is gold right now. But this deal isn't just about scaling up, right? Here's where, based on our analysis, it gets really strategic. It seems this acquisition is profoundly about expanding and diversifying Torrent's entire portfolio. The strategic aim isn't just boosting their presence in existing areas like cardiac and gastrointestinal, which are already strong for them. It's also about making a significant foray into entirely new, attractive segments, specifically ophthalmology, and strengthening their existing pediatric portfolio. It sounds like the guiding principle here is something like minimum overlap, maximum synergy.
Indeed. That's a very good way to put it. The strategic intent behind strengthening core therapies while venturing into new ones is absolutely crucial. Our analysis points directly to a key strategic advantage, this minimum direct molecule overlap between the India portfolios of both companies.
Okay, minimum overlap. What does that mean practically?
Well, it means that brands with direct overlap, so selling the exact same active pharmaceutical ingredients, account for, get this, a mere 3% of the combined sales.
Only 3%.
Wow. Yeah, it's remarkably low. And this is exceptionally important because in the pharma industry, product portfolios often clash, right? That leads to painful rationalization later. This minimal overlap significantly minimizes the risk of cannibalization, where one company's product basically eats into the sales of another's existing product.
Right, avoids shooting themselves in the foot.
Exactly. Instead, it ensures that the acquired revenues are largely additive. They contribute directly to Torrent's overall growth. And for the maximum synergy part you mentioned, Torrent isn't just adding a new set of products, they're gaining distinct therapeutic areas. These can potentially be cross-promoted by their existing, quite robust sales force, utilizing their strong distribution network without that internal competition.
Oh, I see.
It really is about making 1 + 1 equal, hopefully more than 2, creating new patient touch points, new growth avenues.
That's fascinating. It's like they're carefully adding complementary pieces, building out their ecosystem rather than just, merging lumps together. And it's not just about what's in the bottle either, is it? Our analysis reveals that leveraging complementary capabilities and future growth avenues is a huge part of this deal. Apparently, JB Pharma brings a leadership portfolio with strong brand equity to the table, our analysis indicates that their acquired portfolio has actually outperformed market growth in the last 3 years in key areas like cardio, gastro, and ophthalmology. So this isn't just about acquiring products. It seems like they're acquiring a proven track record of market success and growth momentum.
Absolutely. The immediate impact of acquiring such well-performing assets is clearly positive for Torrent's overall growth trajectory. Like you said, it's not about fixing something broken. It's about amplifying an already successful model, bringing that momentum in-house.
Makes sense.
But if we connect this to the broader picture, the analysis shows the deal also offers wider benefits, moving beyond just the domestic market focus. Torrent is gaining an entry into contract manufacturing of lozenges. Now, this might sound niche.
Lozenges. Okay.
Yeah, but it's actually quite a smart diversification.
Yeah.
It means they're not just selling their own drugs. They can now potentially produce for other companies. That opens up an entirely new revenue stream and lets them leverage their manufacturing infrastructure more efficiently. It adds a tangible layer of resilience.
Interesting diversification.
And based on the analysis, it also presents an opportunity to strengthen its presence in key export markets of U.S., Russia, and South Africa. So this kind of diversification, both in manufacturing capabilities and geographical reach, adds another profound layer to the strategic benefits, and potential long-term resilience for Torrent, sort of shielding them from potential downturns in any single market or capability.
That diversification is key, especially now. Given the volatility in global markets, how crucial is something like that new contract manufacturing capability to Torrent's long-term resilience? And what did our analysis reveal about their history? I mean, can they actually handle integrating something like JB Pharma effectively?
Well, that's a critical question, and Torrent's track record of successful integrations is actually a really strong foundation for this JB Pharma deal. This isn't their first rodeo, as our analysis emphasizes. Torrent has what's described as a credible track record of acquiring and integrating India-centric businesses.
Okay.
We've seen this before. The analysis points to specific examples of past successful integrations. Think Elder back in 2014, that strengthened their pain management and women's health segments. Then there was Unicum in 2017, which significantly expanded their India market share. And more recently, Curatio in 2022, that marked their foray into high-growth pediatric dermatology and cosmetology.
Right, I remember those deals.
So acquiring and successfully integrating assets isn't just about, combining balance sheets. It's about merging cultures, systems, operations. Torrent has repeatedly demonstrated that they can navigate these complexities, extract real value from acquired assets, and essentially de-risk these kinds of large investments. That history provides confidence.
That track record definitely matters. Now let's maybe take a closer look at the therapeutic expansion and strengthening, focusing specifically on their core areas first. Our analysis of this acquisition really shows how Torrent is solidifying its existing strengths big time. We're talking about projected increases in their market share in the cardiac segment by a substantial 410 basis points. That's 4.1 percentage points, bringing them up to 11.3% share in cardiac. And in the gastrointestinal segment, another core area, we're looking at an increase of 270 basis points, reaching 8.4%. Pretty significant jumps.
They are significant jumps, and the implication is profound. These aren't just minor increases. They really solidify Torrent's position as a major player in these large, consistently growing, chronic-heavy segments in India.
Chronic heavy, right.
And this is crucial because chronic conditions, think heart disease, diabetes, they often require lifelong medication. That ensures more stable, predictable revenue streams for Torrent. It's quite different from acute conditions, which can be more susceptible to market fluctuations or seasonality.
Makes sense.
Think about the benefits here. Increased physician mind share, meaning doctors are just more likely to think of Torrent's products first when treating these conditions. Then there are the economies of scale. Larger volumes lead to better negotiation power with suppliers, more efficient marketing spend.
Right.
And finally, the potential for real brand dominance within these crucial therapy areas. It aligns perfectly, as our analysis suggests, with Torrent's established business model focusing on these long-term chronic therapies.
Building on that stability, let's shift our focus slightly to the exciting strategic expansion into new and growing therapeutic segments. Because this acquisition helps Torrent to foray directly into the ophthalmology segment. That seems like a big deal. With, India's aging population and just generally increasing screen time, the demand for eye care seems like it's probably skyrocketing. Our analysis notes that JB Pharma had actually in-licensed some strong Novartis brands in this area. and complete ownership transfer of those brands is expected in January 2027 after a payment of about USD $116 million. Beyond ophthalmology, our analysis also highlights how the acquisition significantly strengthens Torrent's pediatric portfolio.
Yeah, the strategic implications here are quite clear, particularly for ophthalmology. This deal gives Torrent an immediate established presence. They effectively bypass the lengthy and, frankly, incredibly costly processes of developing new eye drugs from scratch or building a specialized sales force, which takes years.
Right, it cuts out a lot of R&D time and cost.
Exactly. This isn't just about diversification for its own sake. It's about tapping into a rapidly expanding market with significant unmet needs. Our analysis also mentions the expectation of better margins in ophthalmology brands post-acquisition, which is obviously a very positive sign for future profitability.
Better margins, okay.
And for the pediatric segment, this isn't a completely new area for them, but it significantly enhances their offerings for a crucial and growing demographic. It builds directly on Torrent's prior acquisition of Curatio back in 2022, which was focused on pediatric dermatology.
Connecting the dots there.
Right. It shows a consistent strategic interest in this pediatric space. It demonstrates a thoughtful, long-term approach to building market leadership, not just random acquisitions.
Okay, and finally, let's circle back to a concept we touched on earlier, but it seems so strategically important it really deserves a deeper dive, that minimal molecule overlap. Our analysis underscores just how critical this aspect is. It confirms that the active pharmaceutical ingredients, the APIs of both companies' India portfolios, are largely different, with that direct overlap accounting for, as you said, a mere 3% of combined sales. Wow, that 3% overlap is still striking me as remarkably low. Is that typical for a pharma acquisition of this size? Or does that tell us something unique about how Torrent approached this specific deal?
That's a great question, and you're right to focus on it. It's what makes this minimal overlap a truly crucial strategic finding in our analysis. In the pharma world, significant overlap is actually quite common, and it often leads to, well, painful rationalization of product lines post-acquisition. Companies have to decide which brand to keep, which to cut, potentially losing market share or disrupting their sales teams in the process. It can get messy.
Yeah, I can imagine.
But with such minimal overlap here, Torrent can essentially absorb JB Pharma's portfolio without significantly impacting its existing product sales. Cannibalization is minimized. This means the acquired revenue is, as we said, largely additive. It contributes directly to Torrent's overall top-line growth. In fact, our analysis projects Torrent's FY27 estimated revenue to be revised up by something like 34.1% precisely because of this additive growth.
34%? That's huge.
It's substantial. But beyond just revenue, minimal overlap means enhanced portfolio diversification. Torrent's business becomes inherently more resilient because it's spread across different molecules and therapeutic areas. If one segment faces a challenge, maybe a pricing pressure or a new competitor, the impact is cushioned by other distinct products.
Okay, diversification benefit too.
Right. It also allows for optimized sales force utilization. The sales teams can promote a broader range of products without competing internally. They can cover more ground, offer more solutions to doctors, and operationally, it just simplifies the integration process significantly. There's less need to rationalize product lines, less need to discontinue brands, which cuts down on integration costs and headaches.
Makes the whole process smoother.
Exactly. So fundamentally, this aspect confirms the acquisition is primarily about strategic portfolio expansion and market penetration by adding complementary assets, maximizing that additive value.
So wrapping this up, what does this all mean for you, our curious listener? Based on our comprehensive analysis, Torrent Pharma's acquisition of JB Pharma looks like a deeply strategic, incredibly well-designed move. It seems intended to significantly boost its market share in India, diversify and strengthen its therapeutic portfolio across both existing and new high-growth segments, and critically, leverage its proven integration capabilities for long-term value creation. It really does look like a textbook example of a smart strategic play in the pharma space.
Absolutely. And if we try to connect this to the bigger picture, consider the broader implications. This acquisition really underscores the profound value of strategic complementarity in a competitive market like India. It demonstrates a very deliberate, almost patient approach to growth, focusing on adding distinct, high-performing assets that integrate smoothly, rather than just growth for growth's sake. Which leads to maybe a fascinating question for you to consider. How might this detailed, patient approach to growth, focusing heavily on integration ease and minimal overlap, How might that set a new standard for pharmaceutical mergers and acquisitions, particularly in emerging markets? Could it perhaps pave the way for other companies to follow suit, prioritizing synergy over just chasing scale at any cost?
A truly thought-provoking idea to leave you with. Thank you so much for joining us on this deep dive into Torrent Pharma's strategic acquisition. We hope you feel a little bit more informed and maybe a lot more curious.